Today we are going to be talking about high yield savings accounts and CDs. Both of these are great options to help you gain interest, make passive income, and get paid top dollar for your money with little to no risk. But how do you know which one of these is for you? If you choose wrong, you will miss out on high interest and you may not even be able to access your funds without paying a penalty. So knowing how to choose between these two options is critical. Now, in today's video, we'll be comparing both options. We're gonna be going over the basics, the pros and cons of each option, and at the end of the day, the biggest differences and which is better to help you in your financial planning to help you make passive income, get paid for your money, and achieve financial security for you and your family. So let's get right into it. And if you enjoyed this video, by the way, give it a like and consider subscribing to the channel. All right, so let's first talk about the basics. Let's go over what a high yield savings account is and also what a CD is, because they are not the same thing. Now, on one hand, we have high yield savings accounts, which are essentially a savings account offering higher interest rates than traditional savings accounts with easy access to your funds. Now, the high yield savings accounts are typically provided by online institutions. They are more liquid, which means they are the cash is easier to access, and generally they are provided by online banks, allowing these institutions to provide higher rates. Now, on the other hand, we have certificates of deposit, and a CD is a savings vehicle with a fixed term and withdrawal rate, offering high interest rates in exchange for locking in your funds. You may have heard 3-month CDs, 6-month CDs, 9 months, 5 months, 5 years, however long. But the truth of the matter is, a CD locks in your money in an account for a certain period of time. And if you decide to take your money out before that, then you will get charged a penalty. Now, a CD is considered a bit less liquid than a high yield savings account. And all that means, sometimes I'm just amazed by some of these terms that people like to use in personal finance. Like it was a lot complicated. It was a lot of complications that I used to deal with when I was like learning a lot about this lingo. But essentially, liquidity means how easy the cash is to access. That's the way I personally see it. So something that is very liquid, that means the cash is easy to access. If it's something that's not as liquid, it has no liquidity, that means the cash is very hard to access, or you have to go through a lot of hoops, a lot of transactions, and some things that you may not want to deal with in case of an emergency. Also, a CD is technically considered an investment. That's the way they do it. I don't consider an investment in my personal opinion, but that's the way people in the personal finance world like to consider an investment, because essentially you're giving your money to the bank for a certain period of time, and obviously that you get paid for your money. Now, both of these methods and savings accounts are FDIC insured as long as they are provided by the bank that is FDIC insured. It's the bank that is FDIC insured and not necessarily the certificate of deposit or the high yield savings account itself. Now, let's go over the pros and cons of a high yield savings account. Let me know in the comments, by the way, if you find this video useful and helpful. I would love and I will appreciate your feedback. Okay, now, when it comes to the pros and cons of high yield savings accounts, let's go over the pros first, that we're going to be focusing on the high yield savings account. Now, when it comes to the high yield savings account, it has high liquidity and flexibility, which means you can easily access your cash, and flexibility in terms of you can put your money in, you can take it out, no fees whatsoever, and it's very flexible, right? You say however much you want to put more money in your account, very good. You want to take money out, no problem. Now, it also has no penalties or withdrawals for using your high yield savings and the money that is there. Also, you can make deposits anytime. It usually has higher APY than traditional savings accounts, as I mentioned previously. If you have an account with Bank of America or maybe Wells Fargo, you're going to notice that high yield savings accounts typically have 10 times, 11 times higher interest rates. When the interest rates were high, now they're probably going to go down to like 9, 10, but still very, very good deal. And also, the high yield savings account, the way I personally see it, it's also really good for your emergency funds. So in case you want to deal with an emergency when it comes to medical bills or pet bills, or your car broke down, or maybe you need to fix something around your house, then your emergency funds can come in handy. And that way you don't have to rely on credit cards to get something fixed or something or pay something. Now, on the other hand, the pros of a certificate of deposit or CD is, generally speaking, they offer higher APY than high yield savings accounts. This is essentially because you are giving your money to the bank for a certain period of time. You're not just giving them your money for a month or 2 months. You're giving them your money for at least 3 months, and that way they can make money off your money, and they give you an interest and they pay you on top of that as well. So that's why, generally speaking, they do have higher interest rates. But when the interest rate for high yield savings accounts for like 4.5%, 5%, I didn't notice much difference between these two options. But now I'm sure I will when the interest rates are starting to go down. Also, they do offer fixed interest rates. So, for example, now that these interest rates from the Federal Reserve are going down, you're going to notice that many high yield savings accounts out there are also going to start going down. I've been making a couple of videos on this over the last couple of months, and you're going to notice that some accounts were at 5%. Now they're at 4.7, 4.5. Some of them are going to 4.1. Marcus by Goldman Sachs, which is the one that I personally use, started at 4. It got all the way up to 4.6%, I believe, 4.4. But now it's going down all the way. I mean, it may, at this point, by the time I release this video, it may already be in the 3s. And that's the way high yield savings accounts work. However, if you put your money in a CD with fixed interest rates, you would have been able to keep a 5% interest rate for maybe 3 years, 5 years, and however long you want to set up your CD for. So this is very important to notice because, again, when the interests are going down, then it may be a good idea to start locking in your rates with the CD. Okay, also with a certificate of deposit, you can predict your returns because it's a fixed term, fixed interest rate, so that can help you plan ahead. It's also good for specific savings goals, like maybe you want to save for a car in 3 years or 5 years, or maybe for a house, and you want to put a certain amount of money, lock in a certain interest rate without having to put in the stock market or try any other method of investment. All right, so now let's talk about the cons. If you have pros, you have to have cons. Otherwise, hey, that's the way life is. You got the yin and the yang. So when it comes to high yield savings accounts, the cons include, of course, it has variable interest rates, which means today you may have one interest rate. Next week, depending on what's happening around the world, they may tank, which is what's been happening over the last couple of months. Also, generally, they have lower APYs than CDs, and it's possible to transfer. You may have to deal with possible transfer and withdrawal limits. So what I've heard from some people when I was making reviews on high yield savings account was the fact that they will get locked out of their account and they wouldn't be able to access their funds. And one of the things that I've learned is that sometimes these banks, they flag your account because they want to make sure that you are the one especially when you are dealing with large amounts of money. What they share with me was that sometimes they lock your account, they flag your account, or they make your withdrawal transfer take longer when they want to make sure that you are the one receiving the funds on the other end. So that way anyone can just not go in your account, take money out, and without you being aware of it. So it's a security measure in some way or another, but I know it can be annoying because we are used to just things happening quickly. And when you need your money for a down payment, for a wedding, maybe you need to fix something in your house, when you need your cash right away, this may be an inconvenience. So to address this, you want to call customer service and talk to them and give them a heads up that you may be making a large transfer coming up. So that way they don't flag your account and slow down the transfer. So that's with respect to cons of high yield savings accounts, variable interest rates, generally lower APYs than CDs, and possible transfer and withdrawal limits. Now, when it comes to certificate of deposits, with the cons, you have limited access to your funds unless you pay a penalty. Also, you have early withdrawal penalties, with that being said. And then also, you cannot add funds during the term. So, for example, if you put in $1,000 in your CD, you cannot just go and add another $200 when you. It's not a savings account, right? So everything is fixed and locked. And because of this, you may miss out on interest rate increases. So, for example, if you go back to maybe a year and a half when the interest rates were on the rise and inflation was ramping, you may have noticed that high yield savings accounts interest rates were kept going up and people were very happy about it. I was happy about it. I'm sure you were if you were a high yield savings account user. But the unfortunate thing is that when things go up, also they go down. So when they go down, then hey, a CD may become a little more useful. So you may miss out on the interest rates if you had a CD during those times. But that's okay because you could always open new CDs, right? So let's think about that. We're gonna go a little bit more deeper into this in a few seconds. Okay, so as you can imagine, there's never a perfect account for anyone. We have pros and cons for each of these. So we just have to learn to take the good with the bad and choose the one that aligns with you and your goals the most at this moment. Okay, so now with all this being said, where do each of these accounts excel? Let's cover when and where they excel because they are good in different situations and they have different strengths. So, with this being said, when it comes to high yield savings accounts, the way I personally see it, they are best for your emergency funds, as I mentioned, to cover unexpected medical bills, car bills, house bills, short-term savings goals, maybe 2 to 3 years. Most people, what I've learned is that what personal experts suggest is if you're gonna need your money in less than 5 years, it's actually one of the reasons why my wife and I started using a high yield savings account. If you're gonna need your money in less than 5 years, then they suggest using a high yield savings account. And if you're gonna take a little longer, maybe 5 years or more, then it would be a good idea to put it in the stock market to let it grow a little bit, because then at that point, in case something happens in the market and the market tanks, then you give it a couple of years to recover. Also, when it comes to those who need frequent access to your funds, if you have a savings account and you put money in, you take money out, you put money in, you take money out, and you have a lot of transactions, you essentially start using it as a checking account, then you may be better off with a high yield savings account. If you want to make regular deposits, if you want to make sure that you keep contributing to your savings account, automate your savings, by the way, then a high yield savings account may be best for you. Also, a high yield savings account is best when the Federal Reserve is increasing interest rates, because that's going to help you take advantage of the latest and greatest interest rates. So when is a CD best? It's best for medium to long-term savings goals. We're talking about maybe 3 years, 5 years plus. Those who can commit funds for a set period. So if you are in the fortunate situation where your emergency fund is covered, you have your high yield savings account, and you just happen to have extra cash, congratulations, my friend. That's a great position to be in. Be grateful. Then it will be a CD could be a good option for you, where you can just take a set amount, $1,000, $2,000, and just set it aside and let it keep growing with a fixed interest rate, even when the interest rates are going down by the Federal Reserve. Also, if you are a saver who is looking for guaranteed returns, or again, as I mentioned, when the Fed is decreasing interest rates. So at the end of the day, there's no right or wrong answer. Personal finance is personal, and you are going to be the one with this video. Hopefully you can make the best decision for yourself. So what's the recommendation? What's my personal recommendation based on my experience, my use, what I would do for my family, what I'm doing for my family, what I would recommend to my mom. Now, personally, I think they're both good options. They're great options, better than savings accounts that are offered in regular brick and mortar stores, by the way. I remember when I was much younger, I was saving and the interest rate was like 0.01%. It was absolutely crazy. And now you can take advantage of these high yield savings accounts in online institutions. Make sure that it is FDIC insured, however. Now, the CDs are probably just a bit better nowadays simply because they will help you lock in a higher interest rate for a certain period of time. Only just right now, because the Federal Reserve is decreasing interest rates. So as you can see on the screen right now, the interest rates are going down. They reached the peak of about almost like 5.5% or so, based on the graph here at the Federal Reserves. So now that the interest rates are going down, and as a result, interest rates in CDs and high yield savings accounts are also going down. So you better catch it before it goes even down further. So overall, to put everything in perspective, a high yield savings account is for you if you need flexibility with your savings. You are saving in the short term and you want an emergency fund. You value easy access to funds and ability to make deposits and withdrawals quickly. And of course, if you want to earn a competitive interest rate with minimal effort and risk. It's the same thing with CDs, by the way. They are minimal effort and minimal risk. Also, on the other side, a certificate of deposit, maybe for you if you want a longer term savings goal you can afford, and you can afford to lock money away for a set period of time, and you want a predictable guaranteed return with minimal management. You can handle the lack of liquidity. That is, you don't have to access your money right away, and you are comfortable with a fixed timeline for your savings, 3 years, 5 years, unless, of course, you pay a penalty. And also, if you want to implement CD laddering, and essentially this entails establishing CDs with different maturity rates. We're talking about maybe let's say you start 3 CDs and you have a CD set up for 3 months, another one for 6 months, another one for 9 months, and another one for a year. So that way, if you think about it, every 3 months, you can mature a CD and you can lock in the current highest interest rate. And you keep doing that forever. So that way you are taking advantage of the highest interest rate available at the time of a CD maturity. Now, this is a little bit more complicated. It takes a little bit more involvement and you have to know what you're doing. But I promise you that once you get the hang of it, it's really not that complicated. And you can certainly an advantage for you if you have, let's face it, if you have a lot of disposable income, then you can set aside some money and start playing around with the CD laddering and taking advantage of the high interest rate. Hey, as Arnold Schwarzenegger said, if the tools are available, then why not use them? You will be a fool not to use them. And if you're in the position to, then it's a great option for you. Now, in my case, what am I doing here? Now, personally, as I mentioned, both high yield savings accounts and CDs are great low risk options. Personally, at this moment, I am using high yield savings accounts. For you, maybe the answer is somewhere in the middle. You could be using your high yield savings account for emergency funds and maybe establish a couple of CDs or a CD for medium term and long term savings goals, depending on what you want to do. Because also, you don't want to go too long in the horizon, because then the way I see it, why not just put your money in the stock market and index funds specifically, not just any stock market, but like index funds where the average return could be 7%. I think it's like 7-8%, taking into account inflation. So if you have a lot of money and you have a very long time horizon, I mean, at that point, personally, I would just put my money, and it's actually something that I do. I just put my money in the index funds, the S&P 500, NASDAQ, Dow Jones, and that way you can just take advantage of much higher interest rate. There will be a little bit more risk with those options, obviously, but the return, if you have a long time horizon, if you're in your late 20s, early 30s, then hey, buy. Warren Buffett said, the average person doesn't know when the market is going to go up or down. Even experts that do it for a living don't know what's going to happen. So the best thing the average person can do, that is you and I, just buy when the market is high, buy when the market is low. Index funds, that's my personal preference. It's relatively low risk, and just let your money grow and have a long-term vision. So if you are interested in getting started with any of these options, high yield savings accounts or CDs, there will be a few links in the description that you can explore and take advantage of. Some of them contain bonuses, and yes, they do support the channel. These are provided by banks and resources that I personally would use, or that I would recommend to my mom. So thank you for watching. Don't forget to like the video and subscribe to the channel. Thank you guys for being here. I'll see you guys on the next one. Peace.